I'm Charlotte McLeod with the Investing News Network, and here today with me is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Thank you so much for joining me online today once again. Great to see you as always.
Hey, thank you for having me, Charlotte. It's always a pleasure to talk to you.
And, we're here once again after yet another Federal Reserve meeting. So I'm hoping that you can help us unpack it as you usually do. The Fed announced a interest rate hike of 25 basis points. I think this was mostly expected by the market, although some people were thinking maybe it would be a little bit higher. I want to ask you just to start off, how did we see the markets react?
Yeah, it was kind of interesting because initially when the statement came out, 25 basis point hike, and you're right, the markets expected that. But the statement itself was a little bit more hawkish, and you saw the S&P 500 initially sell off. And then Jerome Powell, he does his press conference about 30 minutes after the statement, and he's always had this very relaxing tone and kind of soothing tone. And he kind of walked a lot of the scary stuff back. And then the markets just went off to the races for the rest of the day. So it was kind of a fake out initially. The markets dumped, and then all of a sudden they rebounded and we're continuing higher today. So remarkable. But, I think the bottom line is the Fed is taking inflation seriously, but at the same time, they're aware of the geopolitical issues going on out there, high oil and how that's impacting the market. And they're kind of letting the market know that, yes, we're going to attack inflation, but we're going to try not to overdo it.
Yeah, I definitely heard some commentary around, the initial scare, and then Jerome Powell came on and he calmed everybody down. So what do you think the market should be paying attention to? The words that we got first, or the soothing follow-up from Powell?
Yeah, that's such a good question. I think for the most part, Powell is trying to walk this very tight line where he knows he has to rein in inflation, right? So he wants to make sure that statement gets out there so that they're covered if they have to work harder and raise interest rates more. But at the same time, he doesn't want to create a market sell-off of epic proportion like in 2018 when the markets dropped 20% in 6 weeks, because then all of a sudden you're seeing the economy go into recession and then you can't hike interest rates. So this is a wild kind of period of time where the Fed is boxed in. It was easy when inflation was under 2% to say, oh, well, we'll print more money. Now with 10% or 8% inflation, you really can't. So I think for the most part, they're going to have to act pretty sharply. But I do think that comes with a lot of risks of slowing down the economy.
Right. And you mentioned these concerns about recession. That's something that I've seen in the headlines today. People are concerned about that. Do you think that those worries have any merit to them?
Yeah, I do think they do. I mean, if you look at the Federal Reserve actions for the last 20 plus years, the Fed has been very poor at just doing the right amount, whether it's on quantitative easing side in terms of stimulus or when it starts to raise rates. They always seem to react bigger or more aggressively than they should. And I do think that the market should be worried about that the Fed is getting a lot of pressure from the government to make sure that they rein in inflation. A lot of Americans are getting hurt by the inflation. And I think that they're getting pushed to do it harder and faster. And that definitely will slow the economy. And again, you have this rebound from COVID, which is a positive. It gives the Fed a little bit more of a, kind of ability to raise and to kind of not cause a recession yet. But at the same time, you have to be aware of what's going on with Russia invading Ukraine, what's going on with high oil. Those are all things that can also slow the economy. So it is a crazy conundrum right now, and it's going to be interesting. I think we'll know in the second half of the year. And I think that the forecasts I'm showing are actually showing that we do have a pretty decent risk of a recession by the fourth quarter or early 2023.
Yeah, it's very much like a, Goldilocks kind of situation, not too much, not too
Yeah.
little, not too hot, not too cold. So we've talked about this before, what the path for rate hikes could look like into 2022. Now that we've actually had one, there's lots of different opinions out there. Do you have any updated thoughts on what we may see through the year?
Yeah, I know as of yesterday, the market was kind of anticipating 8 rate hikes in 2022. I think at most you'll get 4 out of the Fed. And the thought process, again, is that the more they raise, the more the market, kind of the metrics of the market, the PE ratios have to come in. And at some point, you're going to see this kind of, wealth effect evaporate that we've been experiencing for multiple years with the stock market always making new highs. So when that evaporates, it's going to create a very slow economy as there's going to be lack of buyers, lack of consumers buying. And I do think the Fed won't be able to fully get the interest rates to where they want without pushing us into a very dramatic recession.
Okay, and let's talk also about what gold reacted
Mhm.
to in the wake of the meeting. What do we see from the yellow metal?
Yeah, so gold initially sold off with the market as it was the hawkish initial statement, and then it kind of rebounded just a little bit. And we've seen gold have a monster breakout, and again, that's something I've talked about with you many times prior in interviews about that coming breakout. We've now seen gold starting to come back in. In fact, let's take a quick look at the chart here. So basically this was the breakout. Remember this trend line here sloping down. We got the breakout and then we got a big move up. And essentially the move took us to what you would essentially as a technician say was a double top. Double top's notorious resistance points. So you expected gold to pull off here. In fact, I unloaded my long swing trades in gold into this move. Now, what I'm doing is oftentimes after a breakout like this, you'll have what's called a retrace to the scene of the crime, which was the breakout line. So I'm kind of expecting a pullback to maybe 1850 or so. And then right around there, I think that's the big buy for the next big move up. I do think at that point, gold takes out this high here, which was the 2020 high as well. And I think you're off to the races much, much higher. And again, the thesis for this is basically that there's no way the Fed is going to be able to get fully away from printing money. In the short term, yes, they're stopping, they're going to raise interest rates. But as soon as we get into a scenario where the economy really starts to go into a deep recession, the only way they have really to do it is to stimulate. And the government can stimulate by spending bills, but that's also, inflationary, right? The Federal Reserve can stimulate with quantitative easing, but that's inflationary. So the long term is just so rosy for gold that again, on pullbacks, you have to be buyers, especially with the breakout that we have seen here recently.
Yeah, and so that's what's been going on with gold and the Fed. We haven't had a chance to speak since everything started going on between Russia and Ukraine. We saw a really big move in gold. It's since pulled back. I wondered if I could get your thoughts there because, we hear a lot that geopolitical events provide a short-term boost, not long-term. What are your thoughts on what we've seen?
Yeah, so I kind of agree with that, the geopolitical stuff, assuming it ends and it doesn't continue for long periods of time, that run to safety is a run into gold. And so again, when we saw the spike up to over $2,000 an ounce, I think that was right in the midst of kind of the crazy initial move with Russia invading Ukraine. And the thesis for the pullback, right? So we've already pulled back from about 2075 back down to about 1940 today on gold, is that I do think that there will be some peace deal worked out in the next week or two. And I think that when you get that, you'll get an initial sell-off in gold. Now, that's just the initial reaction. Just like the pop-up when the invasion started, you're going to see a quick reaction to the downside. And as investors, as myself, I will be looking to buy that. Because once the dust settles, once that invasion, once let's say peace comes back to that area, then people will start saying, okay, now let's focus back on inflation and what the Fed is going to do. And ultimately, again, there's no way to really get long-term inflation back under 2%, in my opinion, without having really, some sort of depression and really flush out.
Okay, and I hope that we could also talk about, trading during times of war and conflict, just in general, not even related to gold.
Yeah.
Because I know that last week you could basically, there are so many things going on. You could take your pick of what commodity or area was doing something interesting. What advice do you have?
Yeah. So number one is when things are most fearful, that's when you have to be a buyer. And we've seen it so many times over. A great example of this is that if you bring up the NASDAQ 100, right? So this low on the NASDAQ 100, that was when the markets opened, when the initial invasion took place. So you saw panic and fear. Russia was invading Ukraine, and it actually turned out to be the short-term low on the market. We rallied up. Then we came in, and again, we're rallying to the upside. And so that low is holding at this point. The reason why that's happening is because investors realize that the Federal Reserve may move slower on hiking, which means more money in the system with the invasion going on. So again, in the short term, those type of blips on the screen are usually kind of inverse reactionary things where you go opposite of if it's fear, you buy, if it's greed, you sell. Another great example of this was with the Chinese stocks. Chinese stocks had one of their biggest bounces, if not biggest bounce ever. Alibaba was up like 36% yesterday. Now, if you looked at what it did just prior, it was in a free fall, right? It had already been in a steep downtrend, and it was in free fall because, you heard that maybe China's going to help Russia, then we're going to put sanctions on China. You heard about delisting because of the SEC. You heard about maybe China invading Taiwan. I mean, there was just this confluence of massive panic on these stocks. And again, what does it turn out to be? Well, when it's most fearful, that's the time to buy. So just kind of keep in mind as a trader, when you have these crazy emotional responses, it's usually wise, as hard as it is, to do the opposite.
Okay, great advice for everybody. So you've been talking to us for a while about the Chinese stocks.
Yeah.
You've also been keeping us informed on what's going on with Bitcoin. So let's touch on that just a little bit. I know you've been telling us that it's going to be heading downward. What have we seen from Bitcoin during all of this tumult in the markets?
Yeah. So and you're right. I have been mentioning China stocks. And in all fairness, even after the big rally, I've been talking about them being good buys prior. So it hasn't been the best call at this stage. But again, I do think that the objective of the Chinese stocks is to understand that there's a long-term game plan here. China, just like we saw yesterday, they basically came out and said, hey, we're gonna stimulate our economy. We're gonna basically protect our tech stocks and help them now. And we're gonna make a deal with the SEC. That's a starting point in the right direction. So I do believe that, again, China's not out to crush their golden jewels, right? They're not looking to just kill their great companies. They want them to be big. They just want them to be not monopolistic so they don't end up controlling the government. The government there is really strict on seeing what's happened in the US with some of these tech stocks being able to control things, and they don't want that to happen. So again, I do believe in the longer term story of China and China stocks. And again, good to see that bounce yesterday. Now going to Bitcoin, let's take a look at the chart. So I still am in the same camp that we're going to head lower. I am long a small position in Bitcoin following or with this breakout. So this is a very short-term daily chart. And you can see we just broke above this little wedge pattern here. So I think there could be short-term upside, maybe to 45 to 46,000 over the next week. But once you take that into account and you erase these trend lines, the bigger pattern on Bitcoin is still very bearish. Big move down, and then you have this sideways consolidation. Historically, when you look at this pattern, this big move down with sideways consolidation, number one, it's referred to in technical analysis as a bear flag. Number two, if you look at 1,000 patterns like this, probably about 75% of them broke down lower. So I do want people to realize that it doesn't guarantee that Bitcoin won't break out above this level here, but at least based on probabilities, you're looking for at some point, probably in the next 1 to 2 months, a break to the downside and a move down to probably 20,000 or sub 20,000. So unfortunately, as much of a long-term bull I am on Bitcoin, thinking it's worth 500 or $1 million, dollars, 500,000 or $1 million, in the near term, I still think there's got to be a downside move before we get to that point.
Yeah, and this is what you've been telling us, I think, for months now. So
Yeah.
we'll see if we get there. We'll keep checking in. I
Perfect.
also want to make sure that we talk about oil. This is something that we talked about when we last spoke at the end of January. You told us at that time, be ready to get out. You said it might go to $90 or $100 a barrel, but it wasn't going to stay there. So we've had some interesting oil price activity. We went higher than that, but
Yep.
as you said, it didn't stay there. So what's going on with oil? What are your updated thoughts on that?
Yeah. So what's amazing about oil is, and you're right, so once you got the extra kind of event of the invasion, that kind of created this new narrative that oil utilized to really spike to the upside, right? You heard about banning Russian oil. You heard about, the war kind of creating this big move up, and oil did shoot up very quickly to 130 and then kind of came right back into that same 100 area right down here. Now, one of the things to note here, which I think is fascinating, is if you go to your weekly chart, let me see if it's on the weekly, you can see that the high on oil at 130, if you connect that high to the 2008 high and you draw a trend line, these lows are perfectly parallel. So it gave me a good basis. At that point, I started adding to my oil shorts, and ultimately we made some good money when it pulled back sub 100 recently. Now, I do think it's going lower, but before we get into the midterm kind of outlook, I think it's important to recognize that when oil was at 130, so many people were talking about it going to 200, and there was really no chance of that. And I'll tell you why. When oil is at 130 or $120 a barrel over the risk of 5 million barrels of Russian oil coming off the market. Number one, that's only 5% of the world's production. So you had price go from 95 to 130, which was a gain of like 33% over the risk of 5% of the oil being taken out of the market. That didn't make sense. Number two, at 120 or $130 a barrel, the demand destruction is massive, where literally I knew people that were saying, hey, I was going to go on this, 3-hour trip to see grandma. Now I'm not, because my tank, it takes me $100+ to just fill up my tank. I'm going to have to do that twice just for this trip, right? So you had this kind of thing where you could argue that just in demand destruction, maybe 5 million barrels globally would be not even needed on the open market. So these were the keys that kind of were telling us that it would come right back in. And so far it has. And I will absolutely look to short it again if it pops back to, let's say, 110. Now, over the longer term, I still think oil goes lower. I think it goes to 75 or lower dollars a barrel. And the idea here is that with the Fed hiking, and we just found out that the UK, their central bank, just hiked. I mean, you're seeing hikes going on all over the globe to try to get inflation under control. With that, you're going to see a global slowdown. And that's not even taking into account the repercussions of the Russia invasion of Ukraine. With a slowdown is going to come less people driving, just naturally, less people traveling, and that is going to bring back oil. So I actually look at the chart of oil from 2008 and I say, you know what, this could be a perfect repeat, meaning that oil had this. So the markets in 2008, the markets topped out basically in late 2007, early 2008. Oil still ran up for another 6 months or so. Now, if you look at the stock market this time around, the stock market topped out kind of in November, December, and here we are essentially almost 6 months later again, and oil looks like it's topped out. And then if you look at what oil did in 2008, look at that drop there. The idea is you might have another drop all the way down here. Now, that's kind of the craziest of all scenarios. That would require a massive drop in the situation, maybe even a really, really ugly recession. But I do think it is a possibility. I do think that you have to look back at history to kind of see what the probabilities of future moves could be.
Okay, so that gives us an idea of where you think oil might be headed. You've kind of been telling us to be cautious about oil, be cautious about Bitcoin. Are there any other areas that you're looking at right now and thinking this is an area where you should be a little bit careful?
Yeah, I think the stock market remains as such. I think, again, if you look at the S&P 500, we've had this awesome kind of bear market rally recently. But, I think the biggest chart that I keep on reminding myself of, and I keep on looking at it daily, is this chart here, where, again, you had this long-term trend, which, by the way, it was when the Federal Reserve was doing some QE. And then you had COVID right here. And then this was your move essentially when crazy amounts of stimulus, way more than this longer term trend, came into the market, right? So essentially I call it the market on steroids, where it was just off to the races. Well, now the Fed has clearly said they're pulling back all those extra measures that they put in during COVID, maybe even additional measures from this period. So in the very least, it makes perfect logical sense that you would at least get back into this longer term trend. And if you see where we are currently, that's still, probably about 10 to 15% lower just to get in the upper range of this. So I still think there's more downside. Be very cautious with the equity markets. Bear market rallies are notoriously like really, really massive, but they don't last very long. So we might be seeing this over the last few days. I am looking to sell my longs into this and then likely pick up some shorts on the downside, or looking for that downside.
Okay, and just one final question. You mentioned being cautious about the stock market in general.
Mm-hmm.
I thought that we'd kind of seen things calm down back from when we had all the meme stocks going on and all this intense interest. But just this week, we had news that AMC has bought a stake in a gold company. And that kind of just brought me back to all of the craziness that we were seeing, back a year and a little bit ago. So what do you think about that? Is that kind of like a last gasp of, this craziness?
Yeah, it's such a weird scenario. It makes me wonder if AMC knows that their business model may not have sustainability with, Netflix and all these other things out there. And maybe they're trying to diversify and kind of draw in that crowd and say, okay, well, listen, we believe in this long-term inflation story, so let's start becoming more of a different type of company, maybe a holding company with different assets. So it's fascinating to see that. Reminds me of Palantir. Palantir many months ago bought a position in gold on their balance sheet to kind of diversify away from dollars. And we've seen, names like Tesla and MicroStrategy, they've bought Bitcoin as well to do the same thing. So that is kind of weird, right? It is a strange one. You wouldn't put those two bedfellows together necessarily, but yeah, I mean, I think it's probably AMC understanding the future, which is very smart. And now they're trying to diversify. I wouldn't have pegged them for a gold company, to be honest. I would have said maybe more in technology, but more power to them. If they see the gold move that I see, that's probably a smart move.
Okay, well, there you go. That's all I have for you today. Thank you so much for coming on to talk. Always great to get your thoughts on the market.
Thank you so much, Charlotte. Have a great day.
You as well. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gareth Soloway with InTheMoneyStocks.com.